Aloha, everyone. Wednesday was oh, you really thought that we were just going to go to new highs without pausing kind of moment, I guess. Boy, I tell you what, yesterday reading the Twitter and Facebook feeds that I like to keep up on and the chat rooms that I like to go into just to get an overall gauge of sentiment, I've never seen the buy the dip crowd so cocky. And I swear to God, if these guys have more than 6 years experience max, and I'm talking about 50 to 100 different individuals that I'm talking about here, it would be a miracle. But and tell you what, the 10-year guys, the 15, 20, 25, 30, 35, 40-year guys, most of them are like, hey man, why don't we let this market try to figure itself out? So even though we're staring at Facebook here, we'll go to the NASDAQ. NASDAQ reversing pretty much close to the downtrending 50-day moving average. It gapped higher this morning, of course, hitting another one of my partial sell signals in the SQQQ. Thanks a lot, Mr. Market. But whatever, what are you going to do? Thought it was going to gap down, did not. But overall, volume was slightly lower than the day before, so it's not a distribution day. If it would have been a distribution day, you know what the odds of a follow-through day succeeding whenever it's met immediately by distribution day? 1%. 99% of those will fail. It's probably like right around 98%, but why not move it up to 99% according to our studies? The bottom line is that it's not healthy. But today's not a distribution day. So right now what we have is paying attention to these October highs right here to the October lows. We are in between this range right here. Until we break out higher or break down lower, you can be neutral here, and if we reverse right here on heavier volume tomorrow, our model will switch to a sell signal, no doubt about it, based on individual stocks, the way they look. However, if we continue to bounce around here on below average volume, it's foolish to be either bullish or bearish. We need to see a resolve one way or the other. If we break out immediately higher here, the chances of it holding, like the other rallies of 2014, to me, seem impossible. If we break out lower immediately and do another V-shaped move to the downside, boy, it could get really ugly because these stock charts are ugly. And like I said, this rally attempt so far is worse looking than the initial part of the rally attempt in February and the initial part of the rally attempt in April. Now, by May and June, we looked fine. And in August, our pullback, we looked fine. Our July pullback, we looked fine. We don't look fine here, so I'm going to continue to be preaching cash is king. New York Stock Exchange reversing right below its downtrending or starting to downtrending 50-day moving average and rolling over 200-day moving average. The S&P 500 is also failing right near its downtrending 50-day moving average. The Dow Jones Industrial Average also failing right at its 200-day moving average. The NASDAQ 100 almost kissing its downtrending 50-day moving average. Not good. Also, if you notice the internal indicators on the NASDAQ and NASDAQ 100 and SP 500, nowhere near looking like it's turning higher. And the Russell 2000 continues to look the best short term, but today, wow, down 1.44%, erasing all of the gains following the gap morning. So the fact that it closed below 1099.88 to 1096.87, not good at all. Potential big reversal. But what's even more hair raising is the amount of short signals technically I would have gotten. Like if this market is starting to get more near new lows and breaking down, sure, you can just short however much you want with as much as you want it. But SDY, the dividend ETF for the S&P, what a big reversal. I just showed you ASH, what a big reversal. VAR, big reversal right at support. E-Trade, big reversal right at support. KKR, big reversal right at support. Yelp, look at this. It's the same chart pattern over and over and over and over and over. And then you get breakdowns like PII, and then leading stocks still breaking down to new lows that were leading stocks, not anymore. CRE, and then look at DDD. Remember when everybody was saying that your money's safe if you buy these 3D stocks back when they were around like around that 50 level? DDD got like all the way up to 82, and now here it is at 36. I'm pretty sure quite a few people got trapped thinking that they could hold these forever. But with all these short positions, also, there were some long ones. EE, a utility company. ED, another utility company. Pretty bullish, right? Yeah, if you're in a bear market. But there were other nice stocks that were out there. WLFC still looks like that it's trying to round out. Another bullish stock, Dr. Pepper. Snapple, pocket pivot point signal. and then GMed Health Services. But besides that, there was nothing. Nothing, 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 nothing. And I mean nothing. ILMN is one of our leading stocks, and it's reversing off its intraday highs, and REGN is still working. But, you know, how are you going to go long that? So there's still a few stocks out there, but overall it looks like we are in a little bit of a pickle. So based on this and those short chart patterns I just showed you, we have our first 2 short positions in about 2 years. So if that tells you anything about the market right now and the condition, how the charts look, I have 2 short positions I have to take for the first time in 2 years. I have not felt like, well, I need to take these and then be proven wrong first for 2 years. But I feel like if I don't take these and they do work, I'll feel more stupid than not taking them. I'll feel more stupid if I do not take them and they work than I will if I take them and they don't work. So CTP, 2% of our account capital. There's over 1 million shares available at IB on both this one and EMPH, I'm about to show you. CTB, after already breaking down, has fought back right to its 50-day moving average and is failing there just like it did in early October again on above average volume. BOP is very ugly, and back here in September it looks like it's topped out. If that's the case, if it can possibly potentially round trip to where this run started initially, it can easily move 50% on the downside. That's the kind of risk reward I like looking for, considering that I would only be about a few percentage points wrong if it does move above 1646. So hard buy stop on the books. If you get short this stock like me, 1647, boom, buy stops. No questions about it. If it goes above 1646, out. Not going to wait to the end of the day to see, oh, should I sell it all now? I'll just be immediately out. So hard sell stops and buy stops still on the books for new positions. EMPH is also another one. Remember, we were long this stock for gains. I think by the time we got out of our final signal, we still had like a slight gain. Did I even hold it that long? I'm pretty sure I didn't. God, I don't even remember anymore. But let's say, you know, even by the time I was out of most of it, we had a 20% gain in the stop by the time we're out of it. Now all of a sudden it's a short position. Looks like it's topped here. Look at all the huge distribution. Look at how ugly the BOP is. And I mean, it looks pretty bad. So how I look at it is that even if it wants to go back to where the move started, which was right about here, which is about the $10 area, we're still looking at about a 30% return. It's not as good as CTP, but if you look at the longer chart pattern, if it does, you know, can get to like the $8, $7 area, we're still looking at right around a 40% gain. But EMPH is a very, very, very bad looking chart, and I don't think that we risk much if we're wrong for the potential gains based on the setup. This one is more riskier than CTP. Still, like I said, this is an uglier looking chart pattern on the short term, so potentially a better short overall. However, if it closes above 1434, that's it. Hard buy stop on the book, we're out. No questions asked. Now, you can't do that in the IRA, and I do have something I want to add in the IRA. I want to get long some volatility here because I think that we're going to be very volatile over the short to near term. So TVIX and UVXY, these things are just too much, too risky. So what I'll do is I'll go ahead and back it down a bit, and I'll do the midterm futures ETF, VIXM. So VIXM is basically reversing the sell yesterday on heavier, not sell, but reversing the sell off yesterday on heavier volume, giving me a bullish engulfing pattern. So I kind of like the way it's set up, and since the market looks like it can get very volatile, it seems to be a good play here. So VIXM will be a 2% position, or excuse me, 2.5% position in my IRA using the 1633 level as my final sell stop. So if it hits 1632, VIXM will be sold out. But that's all I want to do. We have no sells going into Thursday. So right now, as we stand, the market looks like it wants to get a little choppy. We'll see what happens. Keep an open mind, everybody. We're under a neutral condition, leaning to a sell signal if we continue to sell off.